Hey guys, I am taking a look at what could potentially transpire next week on the dollar Swiss. Uh, I I'm looking at it, and we're sitting right smack dab in the middle of two segments, two weekly segments that is. So this is starting from a higher time frame, uh, and we've been pretty consistently on the last several months on a pretty hefty downtrend. But coming into this spot right here, which you can see it's kind of like a little hidden supply and demand area. Coming into this spot right here, and more particularly a little bit higher than that, not necessarily deep enough to front run it, but fairly close to that supply zone. The bulls have been stepping in a bit. Uh, if we map out these wicks over to the left here, you could see that that really aligns with the bottom of that little zone that kind of populated itself. So one thing I want to take a look at is how we worked ourselves to that point and how this became a zone of interest and what it looks like going forward. So if we plot this out, if we plot out this little fib run right here, you see we started with a fairly large zone, right? And then as we dove down, if we look at the lower or I guess the shallow pullbacks, right? The 38.2 and the 23.6. If we get rid of these deeper retracements and we look at the more shallow, hefty or heavy-handed bearish movement, you see that that negative or that 23.6 fills pretty quickly, and coming out of that same spot, that same zone that we highlighted, that same precise point that we highlighted, becomes that zone of interest within that zone. So we built out essentially this 50 to 61.8 reversal zone off of the run upward. And then coming into it, we've got that negative 23.6, which in the end becomes that precise point. So what I want is to leverage this anchor and pull it up a little higher. Whoa, I didn't mean to pull the whole thing. I want to take this anchor and pull it up higher to the true high that we now have. And as you can see, what that gives us is essentially that same zone. We've got that precise point that we highlighted to begin with, and we've got that we've got that 61.8 retracement. Going to get rid of this 50 here, and now we've built out another. We've got that consistent zone right there. So if I were to add on just a little bit of trend, um, as I highlighted earlier, pretty consistent downtrend. If I plot this out, got a nice little channel bottom, and we're kind of squeezing down. And then if we take this one step further and we look towards that completion, you could see that this run down completes a little bit deeper than the bottom of that zone that we've got highlighted. But what it gives us is a really validated point to use as a new anchor. So if we clear this off, we've got a new anchor to leverage our fibs here. And if we do take this down, we stack up on that negative 23.6, right? And any one of these is viable for withhold or for continuing down that short trend, right? Because we've got the 50, the 61.8, and the 78.6. Nothing shallow. So those profit target completions are still valid to me. So looking at it, what this allows for is first and foremost a little bit bigger of a zone, right? We're going to pull it down to both those stacked negative 23.6 retracements, but also instead of looking strictly at the 61.8 and giving myself a little bit of or a lot of cushion there, what I am looking at instead is two different entries, much like I talked about on the Euro Pound, where the Euro Pound video that I had the other day, where we've got a little zone that gives us the option to tailor our entries based on our week. Um, we've now got two options for entry looking long as we come into this zone. We've got our first entry here, which, depending on how quickly we can fill down, would be a aggressive entry, right? Because you've got your aggressive entry here, and then you've got your stop loss here. Second entry would be especially great if we could kind of drift back into it and test that trend line, and we could show some bulls step in and get a little bit of a slowdown, but we still get a wick and a spike down here towards that precise point. Um, and ideally would have our that would be that would be our option, is would come in here heavy, and the Bears would still retain control at least until we test here. So if we do spike down past this, and we start to test some of these points south, I won't necessarily stray away. They're a little bit more conservative than an entry right here, even if the Bears are really bringing the hammer down. To me, I'm gonna watch it, and I'm gonna be judging it in the next couple of weeks. But if we can really gain some momentum and some steam coming out of these retracements here, and we can push down towards that bottom of that channel, and then more particularly fill this zone right here. If we test the trend line in the top of that zone and slow ourselves down, and we spike with a wick down anywhere in between this zone right here, what we give ourselves is, even a shallower zone to work with, which I much prefer. So we've got aggressive entry here, conservative entry down below, and if this is the case, we've got an entry here with a stop below here, or an entry here with a stop down below the 78.6. Either one, we could continue up for a little bit and fill the 61.8, which will bring me to my next little piece of visibility going into next week. But we could fill all the way down here, as we roll over and start to push down. And if this is the case, if we fill down around here, that would be ideal because we just have much more confluence working with it. Now, if we drop this down to the daily, you can see we already started to get some of that momentum out of there. Um, but what we're looking at now is price coming back into a really solid zone. Bear with me. Really solid zone here. And if we are to map this out further, you can see that we're given a pretty shallow retracement, but a good retracement because of the confluence nonetheless. And so if we pull down even a little further, right, even a little bit further to this other one, I'm not going to plot it, but you can see with my cursor that anywhere around that 50 still looks good for some confluence. Now I'm not going to go long here. The longs to me are down at the channel bottom, but what this would give us is we roll out of here and we start to formulate another little bullish rise up to this negative 23.6 here, uh, into these zones to look short. Then we build out we've already got a nice little reversal zone between the 78.6 and the 61.8, depending on where we're going to cross this. And if that is the case, we get that negative 23.6 testing, right here. That's a little bit far-fetched. I think that's a little bit too forward, but coming up, if we could spike, and again, much like the going long at the channel bottom, if we can start to slow down at profit targets and then spike up and test here, then I'm going to be looking for a really strong short with a shallow-ish retracement based on my risk to reward, with the 61.8 being that stop sitting up high. So I'm not going to look as far as the 61.8. So and if you recall, that's from a prior some prior movement. But looking down at the 4 hour, it shows very similar structure. There's a lot to like right here if we do hold shallow, and there's even more to like on the 4 hour if we do hold this level right here, because what you give yourself by looking at it on a slightly smaller time frame is yet another piece of confluence that shows itself. Strong turnaround here, strong turnaround here, spiked past it twice here, but then using it as a springboard to the other side once, twice, three times, and then off we go. If we can get all the way back down here, I might consider the long. If we can get down to kind of this little change control zone, kind of sitting in the middle here, pull it up just slightly. So we look for that higher time frame, still 4 hour change control right there. We can get all the way down to the 61.8 that I would strongly consider a long, and then ride it up to targets to the upside before I start to look for that bearish turnaround. But really what I wanted to give insights onto is taking your 4 hour, or taking your weekly bias, and building out some context around it, and then using that as leverage to build out a stronger case for some short-term entries. So we've got, long, mid, and short-term entries built out based off of just one chart here. So I'm going to leave it at that. I'll share this lowest time frame 4 hour chart so that you can remove as necessary and look upward to the time frames. But just wanted a quick insight into what I was kind of looking towards for this particular coming week.